Welcome to Money Chat, the place to get information on money, personal finance and budgeting. Investing advice for beginners. Investing is a long-term game, so it's important to remember when you're planning on funding for the long term. There are many benefits to keeping your money in stocks instead of bonds or other traditional saving options. For example, stocks offer you the opportunity to earn dividends. Payments companies make to their shareholders quarterly or annually. Owning stocks gives you access to the value of company stocks as they increase in price over time. As a result, it gives you greater returns than expected over time than other investment options like savings accounts or fixed interest bonds. Investing advice for beginners is to consider diversifying your portfolio and reducing risk by spreading your investments across various companies. Money Chat wants you to get great value in listening to Investing Advice for Beginners. There is great investing advice, so continue listening. What is investing? Investing is the process of putting your money towards a long-term goal. It can be anything from the distant future to retirement. When you invest, you're making an extra effort to increase your wealth. Using whatever money you have creates a more significant position or stake in an asset that may increase in value over time. You're putting it to work in many ways when you invest your money. For example, you're giving it time to grow, or you're looking for ways to recover capital you've lost. You do the former by investing in the market, buying stocks, bonds, and other financial instruments, or possibly lending money to a company seeking startup capital. The latter is by buying real estate or starting your own business. Why invest? Investing can be fun. Investing is a chance to put your money to work, potentially earning you more money in the long run. Investing can also provide you with a sense of security. For example, suppose you're worried about your job or the state of the economy. In that case, you can invest some of your money more stably, which gives you the peace of mind that comes from knowing you're helping to protect your future. Investing allows you to make your money work for you. It's a way to put your money to work, earn more in the long run, and provide security. The most significant benefit of investing is that you can protect yourself from uncertain financial times. Place some of your wealth into investments designed to preserve and grow it over time. Diversification of your portfolio. Diversification is a way to protect you from any single stock in your portfolio getting hit hard if the company does poorly. For example, let's say that company ABC Incorporated is struggling, and its stock price is plummeting. If all of your stocks are in ABC Company, your portfolio could be entirely affected by the falling stock price of ABC. When it comes to investing for beginners, diversification of your portfolio is critical. But unfortunately, many stock market investors need to pay more attention to diversifying their stock holdings, which can prove detrimental in the long run. However, diversifying your stock investments across different industries will reduce your risk and increase potential returns on your investments. A straightforward way to diversify stock holdings is by investing in stocks from different sectors such as technology, healthcare, consumer goods and services, energy, finance, etc. It will allow you to spread out the risk associated with stock market investments. For example, if one sector dives due to economic or political events, others may remain stable. Additionally, stock prices tend to move in waves. Therefore, by diversifying stock holdings, you can take advantage of rising stock prices in different sectors. Investing for beginners may also involve investing in different countries or regions and stocks from companies of varying sizes, such as small cap and mid cap stocks. Investing abroad allows you to gain exposure to foreign markets and currencies. In addition, smaller companies can provide higher returns due to their more significant growth potential. Another important factor in diversifying stock investments is the amount invested. It's important to put only a little money into one stock or industry, which can lead to riskier outcomes if that stock or industry underperforms. Additionally, too few stock investments can be very risky as it limits your potential gains. Investing stock in different companies and industries will allow you to spread out the risk while still providing you with a solid return on investment. Diversifying stock investments is essential for any investor, especially those just starting. By spreading stock holdings across different sectors, countries, regions, and sizes of companies, you can reduce your risk while simultaneously increasing potential returns. Ensure that diversification is part of your stock market investing strategy to maximize profits and minimize losses over the long term. Stocks and bonds. Investing in stocks is the most common way to diversify your portfolio. Stocks are pieces of ownership in a company. In addition, some stocks have a dividend, which is the company paying you a portion of the profits the company makes. The significant advantage of stocks is that they can provide a steady return over time. The major disadvantage is that they're not very safe. The value of a stock may increase or decrease depending on the company doing well or not doing so well. Bond funds are like loans between governments. You agree to pay back the lender at a specific date and give them interest. If the company doesn't do well, you may get your money back at a lower interest rate than stocks. Investing in stock markets can be a great way to secure your financial future and increase your wealth. However, it is essential to understand stock market investing before taking the plunge. Here are some tips for beginners who are looking to get started with stock market investing. 1. Do your research. Before investing in stocks, you should research different companies, sectors, and stock markets. In addition, you should take time to understand the history of stock market performance and look at current stock prices. It will help you make an informed decision when investing in stocks. 2. Start small. It is best to wait to invest large amounts of money immediately if you are a beginner investor. Instead, start small and gradually increase your stock portfolio as you become more familiar with stock market investing. 3. Diversify. Investing in various stocks can help reduce risk and maximize returns. When diversifying, look for stocks in different industries and global stock markets. It will ensure you are not exposed to too much risk if one stock fails or performs poorly. 4. Invest regularly. You should also make sure to invest regularly and not just when stock prices are low. Doing so ensures that you are buying at various price points and increasing your chances of making money from stock market investments over the long term. 5. Monitor your portfolio. Lastly, it is essential to monitor your stock portfolio regularly. Make sure to check stock prices, stock news, and industry trends so that you can make the best decisions about when to buy and sell stocks. By following these tips for investing in stock markets, beginners can start with a strong foundation and increase their chances of success in stock market investing. However, it is essential to do your research and remain disciplined with stock investing if you want to maximize returns over the long term. Exchange-traded funds, ETFs. An ETF is a kind of investment like a sandwich made up of stocks and bonds. ETFs come in various flavors, ranging from those that focus on specific sectors to those that are more broadly focused. In addition, you have a more comprehensive range of options to invest in regarding which ETF you choose. For example, actively managed ETFs and those that are more of a set it and forget it type of investment. Exchange-traded funds, ETFs, are stock market investments that provide investors with a great way to diversify their portfolios. It gives you access to the stock market without buying individual stocks. ETFs offer an attractive alternative for those just starting stock investing. It typically comes with lower fees than mutual funds and can be traded easily on stock exchanges. For those new to stock investing, there are a few things to keep in mind before diving into ETFs. 1. Understanding the stock market and how stock prices are determined is necessary. 2. Investors should research and select ETFs that best meet their personal goals and risk tolerance. 3. Investors should be aware of the fees associated with ETFs, as these can significantly impact returns. 4. Understanding the tax implications of investing in stock market ETFs is also essential. ETFs are an increasingly popular investment option. It can provide an excellent way for beginners to get into stock investing. However, investors can make informed decisions about stock market investing by understanding the basics. It would be best if you researched ETFs that suit your investment goals. However, with the proper knowledge and strategy, stock investing for beginners can be an enjoyable and profitable experience. Mutual funds. Mutual funds are ETFs that get you to the party a little early. Rather than just owning stocks and bonds from different companies, you get to select from various funds from other fund companies to put together your portfolio. If you pick one fund and lose money, it only affects part of the fund company. So it can be a much safer option than picking individual stocks and bonds. Mutual funds are an excellent option for stock market investing, especially for those new to the stock market. Mutual funds allow you to build a diversified portfolio without purchasing individual stock shares. As a result, it makes it much easier and less risky than buying just one stock at a time. When investing in mutual funds, there are some things that you should consider as a beginner investor. First, understand the fund's objectives, risks, and management fees to determine if it suits your investment goals. You should also ensure that the fund has a good track record. For example, performance over time has low risk characteristics such as low volatility or reduced downside potential. Additionally, it is essential to understand the stock market and how it works. Investing in stocks can be pretty tricky, so you must educate yourself on the stock market, stock trading strategies, and stock investing principles. Considering the current economic environment, political climate, and other factors affecting stock prices would be best. Finally, always consult a financial advisor before making any significant investment decisions. A financial advisor can provide invaluable advice about which types of investments are best for your individual goals and situation. They will also help you create an investment strategy tailored to your needs and objectives. As a beginner investor, you should know these key things before investing in mutual funds or stocks. Then, by doing your research and consulting a financial advisor, you can ensure that you make informed decisions and maximize your investment returns. Stocks provide you with a steady return over time. However, they're not very safe, so be careful to put only some of your eggs in one basket. You can diversify your portfolio by investing in stocks and bonds. Mutual funds are a safer option than investing in individual stocks, though they come with a higher management fee. ETFs are a hybrid between stocks and bonds with a bit of both. And finally, you can get into the market early by investing in mutual funds. Investing is a long-term game, so keep your guard and finances safe. Please hit the subscribe button to get the latest from Money Chat.